This is our Forex blog for September 24th, 2012. And like we do most days, we use our currency meter as the first step of our three-step easy Forex trading system to determine which currencies are strongest to buy and which ones are weakest to sell. So the best way to use our currency meter is to use our sortable one, and then you can just simply, I like to sort it by the hourly trend. And so you can see right now the yen's going up over the last hour statistically against 100% of other pairs, then the Australian, then the CAD. Let's resort this. It just changed. You can set auto sort if you want and have it update every 10 seconds, 15, 30, or whatever. But these are the strongest currencies. And basically the real-time trend is on the top, 15-minute trend, hourly, and then underneath that is the daily, weekly, monthly. So the yen was pretty much strong most of today against all time frames. Let's look for one that was weak. The New Zealand had pieces of weakness, and anything at or above the 80 level, like right here at 6, extremely weak across the board. 6 o'clock, the yen was already strong, so you could have looked to sell the New Zealand yen around 6. Let's bring that currency up. 6 o'clock, hit the plus key to zoom in. There's 6. So 6 o'clock was right around here. There's a nice little rectangle pattern. There's two methods that we use pretty much for our entry. Once we identify a super strong or super weak currency, one method is our little rectangle pattern where it goes sideways like a rectangle for 30 minutes to 2 hours. The longer the better. This one started right here at 4:19 and it broke out at 6:16. So it was a 2+ hour sideways range, and you can see it fell from around 64.10 all the way down to 85. It's a 25 pip move. And you knew ahead of time what the likely profit target is just by drawing your fibs off the previous, big swing. The bigger the swing, the more likely it is to be the profit target. And look, to the very pip, that was, where it stopped. Let's scroll this one back. This one had, a mixed trend. It's very hard to trade when multiple time frames are going in different directions. Your best bet is to find a currency that's strong, at least on real time, 15-minute, hourly, and daily. If those three line up, it's a good probability. And anytime you see a lot of strength like this, the longer time frame trends are up, and then the pullback phase has significantly less strength or weakness than the previous strength. That is a very easy pattern, and usually the previous trend momentum continues. So if you were watching the dollar here coming up to 6, when this bar here showed a lot of strength at 550, you could try to find the exact opposite pattern. In other words, a lot of weakness, longer term trend is down, just a tiny amount of strength coming up to 6. That might be the New Zealand here. So let's take a look at New Zealand dollar coming up to 6. This would be another high probability trade. Here is another rectangle pattern, perfect pattern, and you can see it's a perfect rectangle here. It broke out from around 82.25, and over a 2-wave period down, it went all the way down to 83. So it's almost a 40 pip move. Whether you made 10 pips here, waited for this little pullback trade, this is a good example of a counter trend up move. I prefer to sell counter trend moves up. You can see incredible momentum on the way down, significantly less strength on the way up, and also as it's going up it's getting less strong. That's just a perfect trade right there, and you can see it fell another 20 pips down there. So that's how you use our currency meter. Step 1 is to identify the high probability patterns. Focus on ones that are strong across the board, like the yen. The New Zealand was weak, as we already showed. Let's see if the euro is kind of mixed, but around coming up to 4, it was pretty weak. The yen was strong. You could have looked for a euro-yen sell coming up to 4. Here's 340. This one, was trending down, retraced back up to the previous day's low, couldn't get back above it, and then collapsed. And one of the things that I'm redoing our signals from scratch. One of the things I'm doing to minimize the number of losing trades is to myself manually look at each currency chart each day, hourly, weekly trend, 60-minute, 4-hour trend, and determine whether to be focusing on buys, sells, or both, and breakout and breakdown trades into both or below what price. And last night I took notes for today's trading. Euro yen likely down, but buy above 101.71, never got up there. Sell and sell hard underneath 101. So in this case, you can see 101 right here. Last night, it trended down. It did break 101, and that was a false breakout, but if you had sold the 101, you probably would have maybe made 3 or 4 pips there. And it came down again, never really broke that level. The third time through that level, right, 101, it went down to 101.60 approximately, so that would have been 40 pips. To me, this isn't enough of a pullback, but this is. So you would have got short here at 87. It went down to about 60. Nice trade. And usually when there's double bottoms, you're going to get a reversal. So I'm always very cautious in selling these. I'm not going to sell this unless it tries to go higher and it can't. And then, you get short again here at 72. You draw your fibs off the previous wave. In this case, look for a tiny swing because it's not likely to go too much below there. And you can see it went right to the 1.618. So you would have sold this here at 72 and out somewhere at 36. Beautiful, approximately 40 pip trade. So with a computer, knowing by human hands whether to be focusing on buys, sells, and between what prices, it's going to improve the accuracy of our automated systems dramatically. Here's the euro dollar, and here's my notes from last night. Euro dollar buy above 1.3, likely max high double top around 31.50. So in other words, if it had broken out, the system would be looking to buy up to about 1.3150 and sell below 1.2944. So here's 29.44. I thought if it broke that level, it's going to kind of, have more odds of collapsing. Last night it did. It fell about 20 pips. You would have gone short here. The system probably would have shorted this level again here and probably lost on that, shorted here, maybe made a few pips, shorted here, made a few pips. And then the last one from 45, it fell all the way down to 05. So that's one of the things I'm doing. There's no way around having a little bit of human intervention in any automated system. And whether it's the signals that show up on your chart or automated systems that we trade and possibly trade other people's money with, it's critical to have the human eye look at the charts to determine, what's going to happen. And one of the things that I do on a daily chart, let's bring this up, hit period D to show you what daily chart looks like. I'm a very big believer of volume profile charting, and we have these point of control levels on the charts. I'm going to change the colors so that it stands out more. One of the things that I use to determine, the buy-sell levels, sell below 29.44. So you can see earlier the euro dollar trended up very nicely, very strongly, up, sideways, up. It had a 3-day pullback for the most part, and then it was just kind of sitting with a very tiny up day on Friday. Obviously, if it broke above 3,000, which is the value area high, I expected the longer-term trend to continue. However, if it broke below this area right here around, and I think I might have used the point of control 2 days ago as my level, 29.46 approximately. If it goes underneath that level, obviously that would be underneath previous day's low as well, and it's going to give more odds to a down movement, which is why today had those nice trend down, significant trend down. So that's, pretty much how I come up with these levels. I'm also using longer term charts as well. Let's just take a look at another one. Pound yen, buy above 127 up to 127.60, up to 128 if it's super strong. And I didn't have, this one was strong, too strong to sell, so I didn't have any sell on here. New Zealand yen, buy from 64.25 to 64. Underneath 64, sell. So the New Zealand yen, obviously we know that that one was down today. by between 64.25 to 64. So this is one where the trend was so strong that I did expect, if it did get down to 64, to get a bounce. And you can see when it first came down here, maybe the bounce would have been looking to buy here at 24 and got all the way up to 40, so it went up 20 pips. Went sideways here, didn't break out. I might have bought a bounce down here as well. And this is where using automated systems along with human can increase the odds. Now this one obviously had weakness today, incredible weakness. So that's going to be part of the system. If it falls or goes below the lower containment bands and is not this weak, it's a much higher probability buy if the human eyesight is telling you to buy. Obviously, looking at charts and determining whether you want to buy or sell and at what prices, you have to use the real-time tools to either confirm or throw your opinion out. This one still did bounce at my levels, but underneath 64 I thought it would be weak, so once it broke 64 we wouldn't be buying anymore. It did get one little bounce off of that. Dollar Swiss buy breakout of 93.56. Let's see if this one had accuracy like all the euro and pound pairs did. So here's 93.56. So last night it would have been a small loss, pretty much break even. And this one, this trade went up. We would have been buying the pullback here. We would have bought this. So you can see the 56 area throughout the day. If you had taken every trade, loss, pretty much break even. This one right here, maybe you would have had a loss before, 20 pip gain. Bought this pullback here, pretty much break even. And then the last trade went from 57 all the way up to 91. Nice 30 pip win. And really, the key to trading is small losses, big wins. You can't worry about having a loss. You do have to focus on having more wins than losses, or significantly bigger wins and losses. It doesn't matter if you have days where you're 40% winning, but on those days you have to get wins that are 1.5, 2 times or more. So obviously if you're risking 10 pips and you make 30, that's 3 times bigger win than loss. If you get into a trade here and it starts to go your way, you move your stop from underneath that bar's low at 50, maybe up underneath here at 55. You're looking at maybe a 5 pip loss. Buy this right here, it starts to go your way, so you move the stop up, maybe you break even here. And we probably would have bought this again, lost 5 pips, got in here, lost 6 pips, got in again, made 20, maybe made a little bit here, and again made 30. It all counts. At the end of the day, you have to add up all your wins minus all your losses, and you can clearly see that using not only our real-time momentum tools, but the human trader eye, professional trader's eye, to determine very high probability breakout levels is going to dramatically help us. One other thing that we're going to be putting into the chart in the next month is when you put on alerts such as trend lines. If trend lines get broken, and you can create an alert right now, we're going to have the ability to send this trend line alert to a script, and the script is going to use a lot of our real-time momentum tools to know how strong or weak the breakout of the trend line is. But trend line breaks are also going to alert and cause trades, and especially off of longer time frame charts like daily, 240-minute hourly charts. Trend line breaks, especially when a trend line gets hit 2 or 3 times or more, when those things get hit, usually there's a 30 to 50 pip move, and that's another thing that's going to be built into our system so that you'll be able to know when your trend lines get broken. So you can draw the trend lines when they get broken. You can have trades trigger on your charts and get on alerts, so you can put those trades on and usually catch some big wins.